welcome to Graceful Aging. I'm your host, Gregory Bator. We all want to stay in our home, and we want to use our home wisely for as long as possible, don't we? We also have to learn, and we do know that our home is our most strategic asset that can help us when we need it most. And today we're going to learn how to do that wisely, how to use your home equity wisely. And we've asked Barbara Stucki, who is a nationally renowned expert on reverse mortgages, to be with us. Dr. Stucki, thank you so much.
Well, it's a pleasure to be here.
You have an hour-long show that we could go through all of your credentials and the acclaim that you have. But you know, really, what strikes me, just what impresses me the most is you're changing the whole system in which our country looks at and prepares for reverse mortgages, and the national government and area agency on aging and all kind of groups are following your guidance, and that's just it's got to be a real heady experience for you.
Well, I think it reflects the fact that we as a nation are at a critical turning point. I think many people are beginning to realize that today's retirement is not the same as the one that their parents or grandparents went through. Many people today don't have defined benefits or good pension plans. They haven't saved enough for retirement. As a result, the equity that they've accumulated in their home may have to now be part of their overall retirement planning and strategy.
And they're hoping that they have some equity in their own,
That's
too.
right. That's part of it. I mean, part of it is thinking at early ages about making sure you pay off that mortgage and be thoughtful about not using the home as an ATM, because, of course, as you get older and on that fixed income, it's a good likelihood that you will need to tap that equity, if not to cover everyday expenses, then certainly as a buffer against emergencies. And the fact that I've been able to have as much of an impact as I have through the National Council on Aging really reflects the fact that we're all trying to find solutions and make sure that people use this asset as wisely as possible.
Well, let's help our viewers today understand just this one vehicle of reverse mortgages, because there are a host of other things that they might look to in developing their financial plan, and I think your website, which we'll tell viewers a little bit more about later, helps in that regard. But let's start out. What is a reverse mortgage? It's a funny term.
Yeah, it is, and it's kind of a hard name, but it does reflect the fact that with a traditional mortgage, you pay the bank a certain amount each month to pay off your debt, and you accumulate equity over time. With a reverse mortgage, what you do is you tap that equity that you've built up, and essentially the bank pays you a certain amount each month. What that allows you to do is increase your liquidity, your cash flow, by tapping that equity without having to sell your house. So it's a way of being able to basically use your home to stay at home.
We're going to get into the specifics a little bit, but can you tell us generally, are the good reasons to use, say, a reverse mortgage, and the bad reasons to consider a reverse mortgage?
Well, I think that decision has to be made from a broader financing strategy, and I think that's what we really try to emphasize. There are no absolute standards of what is good and what is bad. I mean, using your resources for something that doesn't make any sense is always a bad reason, you know. So I think it has to be done very strategically. Clearly, if you're not planning on staying in that house for a very long time, then tapping the equity and going through the expense of taking out a loan, any loan, is probably not worthwhile. So you have to think about whether you want to stay in that home, whether you're safe and comfortable there, whether there are other resources available that you might be able to tap. If it does make sense to take out a reverse mortgage, then it's very important that you learn about what these loans are and make sure that it fits within your what it is you want to do.
You know, from my experience outside of being a television host as an attorney, years ago, I knew of and we saw reverse mortgages, those situations. Were they different 10 years ago or 15 years ago than they are today, just how they're, say, marketed and used?
Oh, the marketplace for reverse mortgages has changed very dramatically just in the last few years. And in fact, I would say that what you know about reverse mortgages, if you just thought about them over the past years, is probably wrong because of all the changes that have taken place. Used to be there was just one type of reverse mortgage, and it was a HUD loan, an FHA insured loan, so it was a government loan. The main program is known as a HECM, a home equity conversion mortgage, and there used to be just one type, and it was called basically a standard loan, and it had sizable upfront costs. And gave you a sizable amount of money, and that was it. It had an adjustable mortgage rate too, interest rate, I should say. So that was your only choice. Now there are actually two different kinds of HUD-approved reverse mortgages. One is the standard loan, and one is the saver. What's interesting with the saver is that it has very limited upfront costs. So the actual upfront costs that have kept a lot of people away with a saver type of a reverse mortgage, it pretty much goes away, but you get a little less money for those types of loans. So
okay. I want to come back to the details of both of those two different
Sure.
ones in a minute. And let's talk, so I've got an understanding now as far as of a reverse mortgage. Can anybody sell a reverse mortgage? Seems like I've seen even on late night TV shows or the early morning, you see the old TV stars or movie stars, and they're suddenly selling reverse mortgages.
well, they're promoting them, but only HUD-approved lenders can originate a loan. The other unique thing about a reverse mortgage is, unlike any other financial product, a person has to go through HUD-approved reverse mortgage counseling before they can actually start to take out this type of loan. So there's actually some consumer education built in with the whole process.
Okay. So a reverse mortgage is it a short-term solution or a long-term solution for a house's financial needs?
Well, again, it varies. As I said, there's the HICM standard loan, which has more upfront costs. And if you think of amortizing or kind of looking at how you might pay off those costs over
Right.
time, that one would probably be a more longer-term strategy. A saver, where there's relatively limited upfront costs, that could be a shorter-term strategy. It might also make sense if somebody just wants to tap the equity in their home to have a little nest egg, because you only pay interest on the amount of money that you take out in the loan. So there's different strategies depending on different types of loans, and that's really important to know. There's also different types of loan features that a person has to consider. For example, the payment plan, whether you take it as a lump sum or a line of credit, or whether you get a regular monthly payment. Again, depending on sort of what your need is, if you have sizable debt, you may want to consider a lump sum to be able to pay off that debt. On the other hand, you're paying interest on that big lump. If you take it as a line of credit, then you only pay interest on what you use and what you need, so that's can be a lot less expensive. The other variations that we have now, there's also the adjustable and fixed rate interest rates, so that if somebody were to take out a lump sum, you might want to have that at a fixed rate and not have to worry about interest rate changes in the future. So there's that kind of flexibility.
So it's not as easy with, even on reverse mortgages, to say, I want a reverse mortgage.
Right.
There isn't a reverse mortgage.
Right.
It becomes a pretty sophisticated decision that you have to adjust for your particular needs.
Well, that's the advantage of the mandatory reverse mortgage counseling. We at NCOA strongly encourage people to go through counseling before they talk to a lender, so they have some understanding of what their options are, what the different options might cost, and whether there may be alternatives that might be less costly for them to use.
Well, let's help people with that juncture. So they need money for whatever their reason is at that particular time, and they see, they get a flyer, they get something in the mail, they read in a magazine, or they see on TV, and they say, well, that's my miracle cure, and they dial up that number, or go to a free luncheon or somewhere, and they get the information. You're saying that really isn't the proper way to enter the reverse mortgage market?
Well, we strongly recommend that people go through counseling. Depending on the situation, they may be able to get free counseling, or else they may have to pay a small fee. But we think that it's important. It's a worthwhile investment. If you're thinking about tapping an asset that's so valuable to most people, it's worth spending perhaps a little money or calling around to see if you can get it for free or reduced cost, and spending the time with the counselor who's unbiased. They have to be HUD approved. And HUD requires a very rigorous counseling protocol and sessions, so it's a lot of information. There's also, of course, information online through a variety of sources. So it's important to do your homework.
Okay, so if I get attracted by one of these offers, that isn't the only way that I can enter the reverse mortgage consideration, and you strongly recommend that people go to an objective, unbiased counselor. And how do they actually find one of those objective, unbiased counselors? How do they enter that marketplace?
Well, they can, obviously, if they have access to the internet, that's the easiest, and they can just type in HUD and reverse mortgage counselor, and there are lists that HUD will provide. Typically, the counseling is done by phone, so that they can either meet with someone locally, and if they live in an area that they'd have to travel, or else if they don't want to, they can get phone counseling.
How long does that counseling last? Say, if I'm going to get on the phone, is it a 10-minute phone call, or is it more extensive than that?
Well, a good counseling session should last at least an hour and a half. And in fact, we think that if a person is getting 20 minutes worth of counseling, that they should really be careful and insist on getting more information, because it takes time to cover all of the key elements. During a counseling session, a person learns about what is a reverse mortgage, what are the different features of a reverse mortgage, how much could it potentially cost. They can get a customized table which shows for their circumstances what it might cost for them and how much their money might last if they pick various different types of payment plans.
Well, let's take a break right here, and let's show our viewers now some of the websites that they can go to where they can access this unvarnished, objective, good, solid information that they should take an hour and a half on their strategic asset planning. Take a look right now at these websites, mark them down, and we're going to come back in a minute with Barbara Stucki and a lot more good information on reverse mortgages. reverse mortgages, something that you perhaps may use strategically with your chief asset, your house. And Barbara Stucki, you've got so much good information. How are there certain qualifications, like basic qualifications, before somebody ever could get a reverse mortgage? I've heard about age and some other things.
Right. It is a loan that's designed for seniors. So all the borrowers who are entitled to the home have to be 62 years and older. And sometimes a person may have a spouse that's under 62 and they think about removing them from title to the house. And have to be very careful about that, because if you remove a person from title, you're basically, they are stepping away from their asset and that ownership. So it should be for people who are 62 and older.
Okay.
It has to be the primary residence, so you have to be living in there for most of the year.
Well, let me back up on the 62 and someone's younger. So
Yeah.
if I'm 65 years old and my wife is 32 years old,
Right.
would I be able to qualify with both of us being on that title?
No.
No. So both parties, all parties who are on the title have to be at the qualifying age of 62 or older.
Right, so if you put your kids on title, your grandkids, or your younger sister, or whomever, that wouldn't work. It has to be, I mean, you can have all of these people on title as long as they're 62 or older.
So I could see where reverse mortgage, thinking about it, really becomes part of your estate planning consideration as well.
That is true, absolutely. And it's very important to talk about this decision with family, because, of course, if you tap the equity now, it's not going to be available for heirs. That said, one of the important unique features of a reverse mortgage is that it's a non-recourse loan, which means that you or the heirs don't have to, if for some reason the value of the house declines or the value of the loan is bigger than the value of the house when it comes time to sell it, it means that nobody has to dip into their pocket to make up that difference. And that's why you pay mortgage insurance on this loan, and why it's a little more expensive than other types of loans. So there's some real important consumer protections like that, part of the whole process, but it does mean that people need to be aware of the fact that it's not going to be available. So
I may not be able, so if I'm thinking about leaving the maximum amount to my kids or grandchildren and it's my house, there's a trade-off there of using it.
Yeah, there is. I mean, it's like any little pot of money. You use it now, you don't have it later. That said, I think it's very important for people to think carefully about not waiting until they're in a crisis situation. There's been a lot of advice given over the years about using this reverse mortgage as a last resort. And I'm very skeptical about that advice, because people, when they wait until they're in a financial crisis, that is really the wrong time.
And why is that?
Well, for one reason, you have very few options. Secondly, you may have dug yourself into such a deep hole. For example, if you wait to fix your roof, what might have been a small patch becomes a huge problem if there's interior damage. So at that point, it just becomes a whole lot more expensive. If you wait to tap that equity in order to get the right kind of caregiving, and instead of getting the care when you need it, instead you try to do it on your own and you fall and you hurt yourself, and now you're in a wheelchair, you may not be able to stay in that home.
How long does the reverse mortgage process take? You know, if I use the full hour and a half of counseling, I applied yesterday, I get an hour and a half of counseling, and then I go and I shop a lender, which we'll talk about. What is it, a month, 2 months?
Well, it depends. I mean, you have to go through an appraisal. The home goes through appraisal, and then there's the loan application, and the loan has to be approved. So I think it's more a matter of weeks, you know. And again, it just depends. If there are major problems with the home structurally, you know, you have to have a home that's in good condition. So
the lender takes that into consideration
absolutely.
as well?
Well, actually, because it's a government-insured loan, it's actually FHA, the HUD, that looks at that, and you have to meet some minimum requirements, not cosmetic, but it has to be structurally sound. And if it isn't, as part of the loan process, a person might need to have to do some home repairs.
When do I have to repay a reverse mortgage?
Well, the whole purpose of a reverse mortgage is that you do not have to make those monthly payments. That's the whole essence of it, that you get the money, not that you're paying the money.
What if I have an existing mortgage? Do I still have to pay my mortgage, but I don't have to pay this reverse mortgage?
Well, what happens if you have an existing mortgage, depending on the size of that mortgage, if the amount of money that you can get from a reverse covers your existing mortgage, then what you can do is you can basically transfer your existing mortgage into the reverse. In fact, you have to if there's any existing mortgage. So that eliminates any monthly payment. And then the reverse, you pay interest on that amount that you owe, and you pay the loan when you move out, or when the last borrower, essentially when the last borrower moves out or passes away.
Okay.
Or sells the house, but
Okay.
basically leaves.
Well, you made a good point there earlier on the existing mortgage and the reverse mortgage. So it pays off the existing mortgage, but then I guess I'm realizing cash resources because I don't have to pay my payment there. And then if there's extra, I may also get that from the reverse.
Absolutely,
I
yeah.
see.
I think
Okay.
one of the things that people think is that the bank owns the house, and it's very important to realize that the borrower continues to have title to the home. It's not the bank that owns the house. It's you own your house. It's a loan. It's just the fact that basically you're not you're drawing down that equity. Another thing I think that's very important for people to realize is this idea of paying off the mortgage. You're paying off your existing forward mortgage, but you still have the debt, and you're just putting that debt into a reverse mortgage. And basically, because you're not going to be paying it off until you leave the house, you're deferring those mortgage payments. And so you still, if you have a $50,000 mortgage, you still have $50,000 of debt on your home. You put that into a reverse, and now you're paying interest on that $50,000.
I see.
So depending on the size of the amount that you owe, or the lump sum potentially that you take out, you could be building up interest very quickly on that loan and drawing down on that equity very quickly. What that means is that when you decide to move, there may not be any equity left.
Okay. So no free lunch is that
No
whole
free
concept.
lunch, yeah.
The 1 year when the last person who's a borrower leaves, and that doesn't have to be with death. If the last person who is the borrower goes to a nursing home or an assisted living home, and if they're gone for more than 1 year, that triggers an obligation to sell?
Right, yeah.
What if the house at that point doesn't sell? The market continues to
Right.
slide, and the house doesn't sell for the amount of the reverse mortgage.
Well, again, that's one of the unique protections of a reverse mortgage. There's no other type of situation where if you have a credit card, you have to pay what you owe.
Right.
You don't get a break. But
Right.
with a reverse mortgage, because it is an FHA insured loan, what happens if the loan is higher than the value of the house, if you sell that house, then you only pay what the house can bring, and the government will make up the difference.
Okay, all right.
Now, that said, if the heirs, for example, want to actually keep the house, they don't want to sell it. If they want to keep the house, then they have to pay the full amount.
Okay.
Because they're getting the full value of the house. But if they're selling it, then there is that protection built
Okay.
in.
Now, there's another interesting point that you mentioned, and that is you still own the house, so that means you still have obligations,
Absolutely.
right? And what, property tax and insurance?
Yeah, the
And
three
maintenance?
main obligations, the borrower obligations are paying your property taxes on time, your homeowner's hazard insurance, flooding, whatever you need in your area, and maintaining the home. And this is really critical that people, when they think about taking a reverse mortgage, make sure that they have enough money to pay those obligations, because although the chances of foreclosure are minimal with a reverse mortgage because you're not making those monthly payments, so you can't miss a payment, if
Right,
you will.
right.
So they can't foreclose on you for that reason. But if you don't fulfill your borrower obligations, you will go into default and you could face foreclosure.
Okay, so not a free ride. You have to still be a responsible homeowner in that regard.
Yeah, and that's true of any loan. I mean,
Good.
that's what the bank does. You're securing your debt with the value of your house, so you have to maintain that house.
Now, how much money can I get on a reverse mortgage? Let's say I don't have, let's deal with this scenario, I don't have any mortgage at all. How does the lender figure out how much they're willing to give on a reverse mortgage?
Well, because we're talking 98% of all reverse mortgages these days are government HUD loans. So in some ways that's determined by the government. There's an upper limit on the amount of home equity that they're willing to consider for a loan.
Okay, so no like multi-million-dollar, $15 million.
You could have a $1 million house, but right now the maximum amount of loan you could get would be $625,000.
Okay.
So there's a limit that HUD puts on it. And one of the unique features of a reverse mortgage is that the amount you get is determined by your age. And the idea is that if you live in your house for a very long time, then you're going to accumulate interest for a lot. And so you have to have a more of a reserve, so they're going to give you a smaller loan amount. And again, it's HUD, it's the government that just sort of has a formula that works it out. There are calculators available. The National Reverse Mortgage Lender Association has a free calculator that you can go to and put in your numbers and kind of get an estimate of both what you might be able to get and what it will cost you.
Very good. Well, we've taken a tour through reverse mortgages. Close us out with words of advice and finish it right out.
Well, as I said, I think this is a brave new world for many people, and you've got to be strategic about making this kind of decision. Beware of scams. Don't be pressured into doing anything, and make sure you get the counseling.
Barbara Stucki, thank you so much for being part of Graceful Aging and giving such great information.
Thank you.
That's it for Graceful Aging for today. Be wise, be smart, use your home strategically.